The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, it's been a blockbuster year for the blockchain industry with unicorns. That is, companies worth $1 billion or more, doubling in the second half of this year. Blockchain Coinvestors, a venture fund of funds and co-investment program, unveils a comprehensive list of the top unicorns. Joining us now is Matthew Merle, managing partner at Blockchain Coinvestors. Hello there, Matthew. Thanks for joining us. So regionally, North American blockchain companies saw the most value creation this year with 27 blockchain unicorns compared to a little more than half that in Asia. And that's surprising to me because I thought Asia was ahead of the curve.
Well, it's great to be here again, Christine. Thanks for having me back. Well, the facts are the facts. Whilst we think blockchain is a global phenomena and there's great teams and great opportunities in every part of the world, it is true that the biggest single concentration of the unicorns is in North America.
So, Matthew, what was the unifying factor with all of this? I mean, with all these unicorns, obviously, North America being in North America seems to have been, at least many cases, an important ingredient. But what was if you could find anything that they all had in common, what was it? What drove that value to above $1 billion?
Great, Lawrence. So look, let's stand back. This morning, you've already talked about a number of different aspects of blockchain. You've talked about traded tokens. You've talked about stable coins. You've talked about exchanges. You've talked about certain themes around the regulatory change and the environment. What's really going on here, if you can stand back, is that we're deploying a global innovation platform that complements the internet we have. The internet gave us global digital communications. Blockchain is giving us global digital monies and global digital assets. And in order to have digital monies and digital assets like security tokens, as you discussed in an earlier segment today, you need digital wallets, digital exchanges, digital custodians, digital settlement systems, digital payment systems, digital on and off ramps. It goes on and on and on. And all of that infrastructure, whether it's CeFi or DeFi, all of that infrastructure has to be put together. And what tends to happen with all emerging technologies is it starts in the laboratory. We don't know what to do with it. For blockchain, that was 2012 and 13 when we first started getting investors to be investors. It moves into a time of great excitement, but not a lot of real use cases. That was like 2015 and 16 and the ICO boom and bust. And then we have real companies with real use cases, massive amounts of capital starts to arrive, the valuations go up, and we move into the early competitive phase and we're up the trajectory on value creation. And that's where we are right now. So as Christine pointed out at the beginning of this segment, at mid-year, we had 30 or so blockchain enterprise unicorns. Today, we have over 60. It's doubled in just 6 months, and it's going to double again next year. And we're also, on the slide that you're showing right now, we have an increasing number of public blockchain pure play companies, more coming, both through IPOs, direct listings, and SPACs. We actually have the largest SPAC focused on blockchain co-investors acquisition, SPAC 1. And we're going to see a lot of going public events. And that in turn allows for the creation of public market vehicles, ETFs, ETPs, indices, and other things. And for the really big investors, that's when they can start deploying capital into the space.
Matthew, were there any takeaways from this report that were surprising or unexpected to you?
The pace is faster than we would have expected. The value creation in the blockchain space is accelerating. We're investors in 30 blockchain VCs in North America, Europe, and Asia. And it's a surprise to see the amounts of capital now flowing very, very fast into those fund managers. By the time you look at the late stage valuations, and here we're talking about the rounds that are being backed by the SoftBanks and the Tigers and the Katuis and so on, the valuations sometimes are enormously higher than we might have expected. I'll give you an example. Forte raising $720 million for an NFT platform with, we don't know for sure, a post-money of probably 3 or 4 billion. These types of valuations we haven't seen for a new emerging technology for quite a while.
So Matthew, you predicted that there would be more than 10 new blockchain unicorns this year, far exceeded that expectation. What are your predictions for next year?
Thanks. Yeah, so we're going through iterations ourselves. So on the one hand, in terms of the blockchain enterprise unicorns, these are really CeFi, centralized companies that are deciding to raise equity and to operate like traditional tech companies. We expect at least 30 more blockchain unicorns in 2022. In terms of the crypto projects who are distributed, decentralized, and typically tokenized, we think the 133 crypto projects trading at more than $1 billion will also increase very substantially. But we also think there may be shakeout there. We think that we're beginning to see the pulling ahead of certain protocols and layer 2 initiatives that people can clearly see are building out real technology and platforms. And we're seeing some of the purely speculative assets dropping behind in 2022. And then the third prediction is that there'll be a lot more public companies. So we expect at least 10 more public blockchain pure play companies in 2022. And we think most of those will probably go public through SPACs.
So Matthew, you also said that the highest returns still come from early stage, which is kind of always been the case. It's also the highest risk. So if you're a smart developer, or you're an entrepreneur, or you're an investor, what type of company, what type of project, what type of technology do you think in this coming year will provide the highest returns among that group that will provide the highest returns?
Yeah, thanks a lot, Lawrence. It's a great question. So let's split. It depends who you're speaking to. If when I speak to investors, I will tell them the answer I have been telling people for 30 years as an early stage tech investor here in Silicon Valley, which is the volatility and the uncertainty of the returns in early stage tech means that you need to be an early investor. You need to invest with the best investors in the category, and you need to be highly diversified. And then you selectively follow on when you can see that one of your portfolio companies is looking more like an emerging unicorn, which is why we followed on to companies like Uphold and Brex and Coinbase and Ripple and Securitize and Bitwise and so on. If I'm talking to an entrepreneur, then there's a big sort of fork in the road right at the beginning. Do you want to be a tokenized, decentralized, distributed, open source software development entrepreneur? Or do you want to be a more traditional tech company founder who's going to raise equity and go down that path? If an entrepreneur answers that question, then my answer changes. So if they're going down the tokenized path, then we still believe there's a lot of possibility in layer 1 protocols, in layer 2s built on top to add functionality to layer 1 protocols, to true DeFi platforms. We don't think that is by any way a mature space. And also in emerging NFT and digital asset platforms. I would call out those 4 if I was talking to an entrepreneur who wants to build a community of open source software developers. If I'm talking to the CEO of a true blockchain startup, then I would right now focus them in on digital monies, digital assets, and the building out of the global infrastructure to enable those things. And so it would still be digital wallets, digital exchanges, custodian solutions, settlement, transfer, payment on and off ramps, and payment rails, etc. Because we are talking to a large extent about the Internet of Money and the complementing of TCP/IP with an entirely new technology stack. Lawrence, so that's my answer to your question.